Why is Wall Street so wary of a rally that keeps breaking records? And could the doubters be missing the bigger picture? As bullish and cautious voices clash, will this most hated rally keep climbing, or is a sharp correction lurking just around the corner?
As you know, markets don't peak when investors are skeptical. They peak when there's over-exuberant enthusiasm. There's no signs of that.
They're not wrong with wondering about the uncertainty relative to those issues, are they?
They're not wrong, but I think it's the amplitude that people got wrong. So in April, people thought if you didn't have a trade deal, we'd have economic Armageddon. But now what they're finding that is if you're wrong, it's just we don't have to fall off a cliff. And so there can be diplomatic solutions or even pushing off deadlines.
Okay. Chris Harvey, survey says. Is he right?
I wouldn't call it the most hated bull market, but I would say a lot of people are looking for a pullback. They're talking about things being overextended. They're talking about uncertainty with the Fed and earnings and lions and tigers and bears. Oh no. I don't know what the short term holds. I think we could see a consolidation. It's really unclear for me, but the underlying fundamentals still strong. We do think the Fed will certainly have to be dovish in the next couple of months. And what we also think is that rates are going to rally because the deficit, in all likelihood, while not going to be good, will probably be better than expected based on some of the tariff news that we're getting.
I mean, this guy is known for being like one of the most bullish people around.
Yeah.
You've been right there riding shotgun with Tom Lee the whole time.
Yeah. I think we were on the show and we were talking about 5,000 being the bottom. Uncertainty was overblown, and this was a time to get more bullish, and the AI trade was one way to do it. We're still there, and we've been talking about how does the AI trade break, how does it pull back. We've been looking at a lot of different things, and one thing I think that's could potentially hurt the AI trade is if you do get the Fed cutting, if growth is better than expected, if rates do come down, suddenly the contrarian trade starts to look better, and you could see a rotation. And I think that's the biggest fear for AI right now.
Okay, bullish. Ms. Dawson.
Decisively neutral and optimistic. So we don't want to fight this trend. The trend is powerfully up. That doesn't mean we can ignore risk. So definitely agree with both Chris and Tom that you're at a point where this is not a market that is way overweight. You still are just in the 44th percentile in positioning. There's still cash on the sidelines to get pulled in. But we have to note that a lot of the things that have led the rally higher coming out of the April low have been the lowest quality parts of the market. You've seen things like speculative, non-profitable tech up nearly 100%. You've had huge runs in areas that show that there's a lot of speculative fervor that's starting to bubble up. We don't think that that is enough yet to kill the rally whatsoever, but we do think that it sets you up potentially for a little bit of digestion. Mostly as we get into this seasonal period in August where typically volatility picks up. So nothing cataclysmic.
I'm glad you brought that up because I wanted to bring that up myself, but you teed it up for me. Goldman's Global Investment Research Team was out with a report today on that very topic. Our speculative trading indicator has increased sharply during the last few months. It now sits at its highest level on record, outside of 98 to 01 and 2020 to 2021. It signals near-term upside risk for the broad equity market. It also increases the risk of an eventual downturn. During the last 35 years, other sharp increases in speculative trading activity have signaled above-average subsequent 3, 6, and 12-month returns, but returns typically faltered on a 24-month horizon. So they're talking about the speculative stuff you're talking about, so-called low-quality stocks, high beta stocks that are going up. Makes you nervous?
So Bob Farrell, who's a legendary strategist from Merrill Lynch, always used to say that parabolic moves go further and last longer than you think, but they never correct by going sideways. So it means that we could still see this run, but would note that high beta is in the 100th percentile. Means that that kind of performance has not gotten better than this. You've seen a surge in call option volume, which just shows that people are only thinking about upside. So it's certainly a potential risk. You saw FINRA margin loan balances up almost 20% in the last 2 months. So people are taking on more leverage. This is clearly signs that people want leverage to the upside, and they're not necessarily thinking about the downside.